The story I brought to the table today is about a fintech app called Chime, which has been closing a disproportionate number of customers' accounts, seemingly, particularly when you compare it to other large banks like Wells Fargo and others. So this app has about 900 complaints with Consumer Protection Bureau and Better Banking Bureau around customers' accounts just being closed with little to no explanation and little to no kind of opportunity for them to either appeal it or even get in contact with the app about why this was done so. The app is claiming in a lot of cases that this is because of basically fraud around stimulus checks, seemingly, as well as unemployment from the government during the pandemic. So this is just, to me, yet again, another instance of all the ways that our current financial system is kind of screwed up in a lot of cases. And also we get into the limits and problems of technology such that there are people and issues behind them. But Jen, I want to get your initial thoughts on this one before we all dive in.
I just first want to read the email message that was sent out to people whose accounts were closed. We regret to inform you that we have made the decision to end our relationship with you at this time. Your spending account will be closed on March 18th. Like, what a
bad breakup.
Mean email.
That's how
like,
you break up with people, right, Jen?
Right. And that's a breakup. That's a breakup. I can't imagine receiving that email. And what happened to the funds that were in the account? They were not returned back to the customers, I'm assuming, Ben?
Sometimes they are, sometimes they aren't. There's about 3 different directions this can go. One, they can say, whoops, we made a mistake, and they can kind of reopen your account. In one case, that decision took 2 months and froze about $10,000 for one customer for that period, such that they had to call their parents and ask them to pay for their lunch at Applebee's when they actually got the news, which is something no 30-year-old adult wants to be in the position of having to do. And there's another one in which, they can actually just return the funds to the government, particularly if it was opened with a sort of stimulus check, which again was kind of the case here. And then a third route is, they can say, we're closing our account with you, and then we'll send you a check with all your funds in the next 30 days at some point. But I think some of this gets at too, and I think is an issue with also a lot of neobanks in general. So neobanks is this kind of new concept of just kind of digital banking apps without having to go to like a physical location, and oftentimes without there being a physical location. But what that doesn't really say is that a lot of these things are not actually banks. They are just kind of the digital infrastructure of an app that is FDIC insured by other actual banks that are out there, but they aren't actually a bank themselves. And what we see is a ton of VC money going into these things. And in the case of Chime, they were actually marketing and saying, hey, we have such low fees, actually use your stimulus account to open up, or stimulus check to open up an account with us. We might give you bonus money. And yet they're turning around on the back end of that and closing people's accounts for potential fraud or things like that when they're actually responding to their marketing. So it's just a whole mess in this sort of neobank industry, and something I think we might see more of. But Naomi, I'll toss to you because you put your hand up before Will did.
Yeah, Will, take that. So, it's Ben, it's such a great point you bring up about how this is an issue with the traditional financial system, right? Where you need, in order to access digital payment rails, you need to use custodians like banks. It creates this whole mess. And what we've seen with these pseudo banks like Chime, which are not really banks, as you said, they're saying, listen, you can have dodgy credit rating. You can do whatever. You don't even need to come in and provide verification in person for us. You can set up an account in 2 seconds, and it's really, really easy. They are marketing to a clientele that you are going to have more fraudulent behavior, right? If you have less stringent requirements. So, basically banks are turning away certain people, with bad credit or whatever. And then these applications say we're picking up the slack, but they're not picking up the slack because at the end of the day, they're answerable to the banks with whom they actually have their accounts. So it's just a longer process and more intermediaries in between the time that, they actually deny these people's services. And really the solution is not having these custodians, as you alluded to, Ben. It's not having these people that are taking charge of your money. It's having an open, monetary system. It's having an open financial system. And cryptocurrency is allowing that. And so I'm so grateful, as always, just my daily mention of how grateful I am to, have alternatives for people out there who otherwise would have their accounts tied up or frozen or money seized. And this actually enables them to participate in digital things that require digital payments. So it's just so important. And crypto really is filling that void. But I'm going to throw to you, Will.
Yeah, no, I agree with you in part, but not totally. So I think we already see inklings of this in crypto. You can very easily go onto something like Dude Analytics or a similar website and find blacklisted accounts for Tether and blacklisted accounts for USDC. And I think we will only see that increase going forward. Of course, those accounts and addresses are typically linked to money laundering or like really nefarious like names and addresses. And so that's why they've chosen to shut those down. But like, I don't see why we don't see that happening more and more going forward. Even yesterday, Jerome Powell talked about how there needs to be more regulatory frameworks built around stablecoins. So I agree with you that like DeFi and those kind of products one day could really solve this issue. But I am worried about the private side of some of these stablecoins that may address the issue they're talking about.
Oh, I completely agree, and we're seeing more and more why crypto is not is actually fungible. We're seeing why cryptocurrencies like Bitcoin and others are actually non-fungible, right? They're not interchangeable. You can blacklist certain addresses, and we are seeing the rise of actual fungible cryptocurrencies like Zcash when you have completely shielded addresses. So that's going to become more and more important in the future.